What's going on, traders? Hope you're all having a great weekend. Wanted to do an analysis of the S&P 500, the Spider ETF, and go over a daily plan for Monday. Markets were relatively flat on Friday. Of course, it was OPEX. They literally ended flat, 0% up or down. Final print coming in at 450. 218, and we do have some news for the week to go over, as well as some key earnings that we'll be looking at. But before we get into all of that good information, reminder that this video is for educational and entertainment purposes only, and in no way should be construed as financial advice. All right, so as far as earnings, we've got a couple of big names reporting this week. Tuesday, all eyes on Google and Microsoft reporting after the bell. And then we have Meta, Facebook, on Wednesday after hours. So those really will be the big ones that traders will want to keep an eye on, how they report. As they being high beta names, they certainly can move the markets. And as far as economic events, we do have a big day Wednesday, FOMC coming out 2 o'clock, and Fed Chair Powell speaks at 2:30. So that is going to be another major event that we are going to want to watch. Thursday, we do have initial jobless claims at 8:30, and core PCE as well. And then on Friday, I'm trying to look here, we do have University of Michigan settlement coming out, as well as a few other things. If you're looking for the full calendar, it is up on my Twitter at _SharkTrader. So both the earnings calendar and the full week of economic events are posted on there for you to check out. All right, so what are we looking for on Monday? Well, before we get into that, we're going to start off with the daily chart, of course. And as you can see here, not much movement in the market. We did print a red candle, but really, we didn't really go anywhere up or down, as we've just been more or less consolidating sideways. You can see that we are just sitting right at value area highs on the 3-year chart, certainly overextended on those on the 2-year and the yearly chart. But the main thing that I wanted to point out here, as far as the daily was concerned, is the slight downtick in momentum here on our overbought, oversold indicator, the Hello Momo. So we were watching for that to start to potentially curl and change colors, and we are starting to see that take place here. So that is an interesting development as far as that is concerned. Let's take a quick look, though, at the weekly chart. And you can see here, markets tried to push up earlier in the week, and then selling pressure did come in later in the week and create this tail here on the weekly candle. So that is interesting as well. The other thing I wanted to point out, let's go into our big picture trends. Now, we've been watching this specific trend line and the potential similarities from 2 years ago in June. And the main thing that I wanted to point out, which I think is kind of interesting, is the candle that printed, and this was actually in August. So we are off a little bit as far as the timing, but because we are here at the end of July. But The main thing is the similarities, although not exactly the same. This obviously printed a red candle for this week 2 years ago here in August, but very similar looking candles. A little bit more selling pressure last August here on this weekly candle, but looking very similar to this one despite the color. So that is a bit interesting, and we'll have to see how this develops if this starts to turn into this type of formation. Usually, seasonality wise, August is a weaker month, so we'll have to see how that develops. But still seeing these very extreme overbought conditions here on the Momo. Haven't seen any color change here yet as far as the momentum, but we will keep an eye on that. All right. So let's start to boil it down to a little bit more of some actionable analysis for Monday. Now, of course, with FOMC right around the corner, we might start to see continued hesitation in the markets. Monday might be a bit more of a regular trading day, but certainly as we get closer into Tuesday and certainly Wednesday ahead of the announcement, we may really see choppy and inconsistent, tricky price action. So let's all be on the defense this week into that major Fed announcement from Powell. All right, so let's look into, let's dig a little bit deeper here. Let's take a quick look first off with our day trading fibs over the last week. Really never was able to get back over our 23.6 retracement. This area here, we've been talking about this 455, 454, 80 zone as an area that the bulls needed to recapture for more upside. And the other thing that I think is interesting, although not too extreme, is the slight change in the trend overall, in the sense that here we have our swing high, lower high, and a slightly lower high again. So we are starting to shift just a little bit. You can see we're going down here, although the trend line doesn't, this isn't particularly valid. We do not have 3 touches on this trend line quite yet, but you can still, I just want to throw it up here as far as the visualization, and then you can see boom, boom, lower, 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 okay? But bulls overall, big picture, of course, are in control. And actually, before we get into this, I wanted to just circle back really quickly and see if there's anything that we can surmise from the bigger picture trends. And we are still sitting pretty much right at this key pivot here. Let's zoom out and take a look at the daily. And we were talking about this being a major key area for the bulls to defend. Otherwise likely to see some more selling come into the markets. They still are holding it, so that is a good sign. And of course, we could totally sell down to this next major bull pivot, or even this one, and be completely healthy and fine. Overall, we're still clearly trading over the the daily 9 and daily 20. So really no cause for any concern, just a healthy retracement. If we do see more downside, bigger picture, really nothing to be worried about, even if we drop down all the way into this 444, which I have been talking about for quite some time, even 440. It's totally fine. Bulls are still bigger picture in control, but that doesn't mean as traders that we are not able to take advantage of these retracements as they happen. All right, so let's get back into our fibs really quickly here as far as our day trading is concerned. All right, so we'll just look at the fibs really quickly, and then I'll go into our balance zones. But I'm sure a lot of these levels are going to be very similar. But it's always good to just have some more perspective. So for me, really, bulls got to get over volume point of control here. On the 10-day hourly, you can see the 38.2 extension right around 453.30 area is really what we are going to need to recapture for the bulls to have chances of moving back up into potentially testing the 23.6 here, but right around that 454.50 area, 455. This would be an encouraging sign for potential moves back up into this zone here. But as far as playing the long, and there's a few ways, very similar to Thursday's plan and Friday. There are a few ways to play the long and the short here, considering that we've just been kind of going back and forth sideways for a little bit. But that being said, recapturing volume point of control and the 38.2 extension here would be an encouraging sign for the bulls again to come back up for this area. So if you're looking for a little bit of more confirmation instead of playing the lower part of the range or really trying to buy the dips, we'll be watching. I would be keeping an eye here in this 453.30 area, and then maybe looking at either at the money or 454 calls for the long trade. But I will be watching too if we do start to sell down to this 61.8 area, potential triple bottom setting up in this zone. You can see, I believe this was Thursday's swing low, also lining up with last Friday's swing high here. So multiple touches, and also this was the open from last Tuesday. Oh, no, this was the 10 o'clock. Hold on. My mouse froze. The 10 o'clock low price as well. So multiple points of contact here right around in this area. So one could potentially look for a direct buy for a long if we do come into this zone. And we'll go to our balance zones here in a moment. But this may end up lining up pretty nicely either with the top of that balance consolidation that we were watching previously. And so there are interesting points of confluence. If you're not interested in a direct buy in this area, certainly a look below and fail recapture could be another move, with your next target coming at the 50% retracement, and then taking off, a decent amount of your position for the prospect of coming back into point of control here to get out into runners, seeing then if that last little bit, your last 10 or 20% can make a higher move. The other way, of course, you could play it as far as the short side is coming up into this area, waiting for that, and then shorting here to make another lower high. So if you're more interested in the short trades, that's another way you could play it. Come up into this area and look for shorts, and then short it back down, and then taking some gains here at the 50, and then seeing if it breaks and coming down here, and then getting into your runners, and then seeing if we can actually break this 451, 37, 35 area, and if we do, then looking for lower prices as well. All right, so that's just our little fib analysis here, but let's go into our balance zones and take a look at what we can defer from that. All right, so we were already talking about this area, the top of our previous balance, being an interesting area where one could consider potential direct longs. Certainly, look below and fail is another way. But as long as this 451 holds, I think that trade could be, still valid. Breaking below, though, you would likely see some more selling come in to the market, and at that point would be looking for potential moves down into 450, 450.50, area, and then ultimately targeting 450 zone, right? So that's what I'll be looking there. Very similar situation. See, for me here, if you wanted to short, of course, in this area, it's the same type of play coming back in to retest the bottom part of this previous range, and then shorting into this area for the moves back down into Friday swing lows, basically Thursdays as well. So that is another trade. But if we do start to recapture back in this previous balance here, we'll be looking for those longs. And you can see how nicely this half gap of this balance range has worked as far as the potential shorts as well. So another way you could play a direct short area, certainly if you don't want to directly short, but a look above and fail as well. But you can see here how we really never recaptured this zone, and this is what we were really looking for last week as far as the longs were concerned. And we never really got above it, right? And it's held strong so far as a pretty good resistance. So if you're looking for even more confirmation that if the direct longs or look below and fail longs don't interest you down here, and you really want to be cautious about the long, still that 455 is going to be what you're going to want to see to get recaptured for that chance to come back up into this upper part of the range. But again, there are still dip buy opportunities to potentially trade, as I was mentioning, in this 25% quadrant, the top of this range. And potentially, yes, 452, this area, you can see it's been supported. This was a nice look below recapture and then a move up. So, there are those opportunities. Well, I'm not quite as interested in this trade. I would personally be looking more for if we come down into this area for any of those direct longs. Probably going to stay away from this previous swing high. But we'll see. We'll see what the rest of the market is looking like if we are here, and then be able to make some decisions. But either way, really this 452 to 451, this dollar range, can offer some potential interesting trade opportunities for traders. So and then I think that's pretty much everything I wanted to go over. Remember these areas as well, you're looking for confirmation back over, but they can act as resistance as we were pointing out earlier. So there's a few ways to play the shorts if you're looking for counter trend trades, or the longs if you're looking for counter trend trades. But if we just kind of go back and forth between these levels in that hesitation in the markets for FOMC, it might be better just to stay away from SPY overall and just to look for relative strength names. Or if you are trading it, really be more in a scalp mindset, in and out kind of quickly. You get 20%, 15%, you're out. Coming into FOMC, the edge would probably be not as strong. So it could be, like I said, a good idea just to stay away from the indices, generally speaking. So, but if you do trade them, I would assume that it would be kind of hard to, probably not going to see a trend day, at all until after FOMC. So really going to lower my expectations and to just be more on a defensive mindset as we're moving into this major event. All right, well, yeah, that's pretty much the plan. We've been trading in the same zone, these same areas, so these levels should all be familiar to everyone. And I hope that you enjoy the rest of your weekend. Make sure that you are prepared for the week, and we will see you on Monday. Take care, and we'll see you there on Tuesday. See what we get after Monday. All right, bye-bye.